guys, it's Max Convexity. Hope everyone's having a good day. Welcome to the Daily Covered Caller. Today's topics, we're going to check out the ETF heat map, see what's up, see what's down. I want to tell you about my interview. I have an interview August 21st with Jay Pestrichelli from Defiance. We'll look at the Defiance trades and the Yield Max trades. We're going to look at the Tesla pre-earnings trade that I've recommended. We're going to talk about the New Year's baby trade. That one's doing really well. It's up $10,000 right now. We'll look at the Delta Neutral, the Tesla crash pairs trade. We'll also check out some charts. Okay, so let's start with the heat map. All right, well, you can see over here, bonds are down. Bonds are in the lower right corner. Fixed income is down here. It's mainly red. Crypto's slightly red today. Semiconductors right here. Stocks. Well, this is leveraged semiconductors anyway, but large cap growth doing well today. All right, so now let's go to the Defiance trades. Triple QY, they did a trade Thursday. They did a two-day trade. They sold the 19710 option. Right now, the price is trading at 19,800 of the NASDAQ, so their option's out of the money. That means it will cost zero to cover. They're going for a possible 1.7 million, and they're up 1.7 million right now. Brings them to down 3 cents a share on the month on an earnings per share basis, but on a distribution basis, which is just the extrinsic income they've managed to gather, divided by the shares outstanding, they're making about 60. Well, the dividend estimate looks like it's going to be around 60 cents. Okay. I was just noticing something I have to update. All right, so JPY, they did the same thing. They sold a two-day option on Thursday night. They sold the 55.10. Right now, the market's trading at 55.58, which is above 55.10. So that means they're making the whole 400,000 they were going for. So these guys are doing fine. They're down 5 cents a share on the month. Dividend estimate is 48 cents. Now, IWMY actually did sell an option for today. They sold the 2210 strike. They sold it 649 times. They received 22 bucks. Right now it's 12 bucks in the money, so they're only making about 10 of those 22 bucks. They're trying to make $1.4 million right now. They're realizing about 600,000 of it. So IWMY is 13 cents a share positive on the month on an earnings per share basis. The dividend per share is coming out, the calculation anyway, is coming out around 82 cents. So that's great. USOY, they have two options open right now. They opened an option Thursday night, last Thursday for Wednesday expiration. It's these 57 contracts at 82. Well, then they opened up 1,223 contracts at 80 on Friday's expiration, or close to Friday's close. Okay, there's the prices they received for the options. So they brought in some money, obviously. Those don't expire till Wednesday, so none of these calculations are right. The spreadsheet's built to calculate that the options expire every day, and on this ETF, the options expire only Wednesday and Friday. So, and I cannot for the life of me figure out how to make the spreadsheet adjust to it. You guys don't know how bad I hate the spreadsheet. I spent 2 hours before this show started trying to get this spreadsheet to tie, and it's still a piece of shit. I really hate this spreadsheet. All right, well, let's look at Tesla and crash. I don't like this spreadsheet much, but it's better than that. It's better than the last one. That last one is the most flawed spreadsheet I've ever had. I cannot get it to work. I don't know what's so difficult about it, but it will not. I cannot adjust it to work. I don't want to build a whole new spreadsheet, but I guess I'm going to have to. I just wanted to modify the one-day spreadsheet. I don't see what's so tough about it, but like I said, I spent 2 hours on it this morning. I spend 2 hours on it every morning. I can never get it to work, so that's why I'm frustrated with it. All right, but as far as the stock goes, or the ETF, USOY is one of the better ones. It's a big yielder, around 50 to 60, I think, in my opinion, based on the IV and stuff. They've already paid a couple payments, but I think it won't have any problem averaging that. I thought it was going to be lower when it first came out, but it's looking like around 50 or 60. All right, so now let's talk about this pairs trade. So this is a person that owns Tesla and Crash at the same time. you have to balance the shares. You have to balance the shares by what's called the delta weight. But right now, if you own both of these at the same time, it's a pairs trade. You are down 13.98%. Okay, if you that's 13.98% you're down. That's including the dividend. Just the NAV of these two stocks together, these two ETFs, is down nearly 30%. The dividend is huge, so it makes it where you're only down, 13.9%. So here's a chart, and this is the blue line is the price of the NAV without factoring in the dividend. And then the red line is with the dividend factored in. So the red line's total return, the blue line's NAV return, right? Okay. So I don't have a spreadsheet built like this for Coinbase and Fiat, but I will soon. So now let's look at the Yield Max trades. All right. Well, we were looking at the Yield Max trades. We're speaking of Tesla crash. So there's the Tesla crash trade. So Tesla has earnings this week. So last week, these guys were able to write, I guess they wrote it last Wednesday night or Thursday. They wrote a call way out of the money up here at 285. Well, then on Friday at the close, they wrote these two calls. So these guys have 3 calls. Earnings are tomorrow after the bell. So 250 to 265, what is that? 15 points. That's about 5%. So these strikes are 5% out of the money, and these are 10% out of the money. But if Tesla has a really good earnings announcement, or that Wall Street accepts the news well, it'll blow up and go right past these two, and everyone will be mad because they're capped out. But in any event, the red boxes are the inverse profit boxes. So those belong to Crash. So they sold whatever these are, doesn't even matter, the 225 and 222 and a halves, I believe. Okay, so we'll see how these all turn out after earnings tomorrow. But right now, the price of Tesla is just kind of grinding sideways. It opened around 250 and it's trading around 250. However, it's grinding sideways from the open, but from Friday's close, it's up 10 points. So this one ought to be interesting. All right, so that's Tesla. Now let's look at NVIDIA. These guys have 3 strike prices. Yeah, they have 3 strike prices. I thought they had 4, but they closed one of them. But yeah, so they have 3 strike prices. But the bad news is they're up big also this morning, and they've almost blown out their first strike price, or they're getting close to it. So we'll see what happens there. So that's NVIDIA. Now we'll do a little AMD. All right, it doesn't look like I remembered to update AMD's. I don't know how I forgot that. All right, but Amazon's I did, for sure. I thought I got AMD's also. Well, there's Amazon's. Amazon's got a 3-strike ladder. I'll have AMD's back by tomorrow. So Amazon's got a 3-strike ladder, and Amazon stock price is going straight sideways from the open and from Friday's close right now. Just grinding. Now we'll look at Coinbase. All right, Coinbase. The internet stocks have really been reacting well to, they've really been reacting well to the news that it looks like Trump may win now, or he's in the driver's seat. And when he picked J.D. Vance, he's a tech bro and stuff. And the idea is they're going to be friendly to crypto and stuff, which is cool with me. All right. I'd rather be friendly to the regular market, but they probably will to the regular market as well. All right, so this is for Coney. Coney's the high yield fund. Now, Coney has an inverse fund also that's called Fiat, so that's what the red profit box is for, same as Tesla and Crash. Anyway, they have, you can see there are 2 strikes here. They've sold the 275 for the Coney, and then the inverse fund is short the 225s. 225 puts. All right, so that's that. Now let's look at a little Misty. All right, Misty, nice job there. Misty's Monday morning and the strike price is blowing out. That's the story of their life. The same thing happened last week. It opened gap past their strike price. So then eventually they put a new strike price out there. Boom. It actually gap passed on Friday. Or it didn't gap past. It went past on Friday afternoon, and now it's still past it. So their strike price is blowing out. They're probably going to need to roll out, or I don't know. We'll see. They may not roll out. Let me just see what happens. All right. I have a feeling I haven't done one yet. I guess I did. I do NVIDIA. Yeah, we did NVIDIA. That's right. And I did AMD, and that's the one that I found I did not do, unfortunately. I thought I did. All right. We'll have AMD back on by tomorrow's show. Okay, so let's go over to the agenda because I forgot what in the hell is going on. We've gone out of order. All right, I've already done the Tesla crash trade. Okay, well, the rest of it's going to be easy. This is my favorite part of the show because this is options. I don't like spreadsheets, if you guys have never noticed. I do them though because the spreadsheets are about options, and I'm trying to show people how profitable these funds are with the profit boxes. It's just these funds are humongously profitable, in my opinion, and generate a lot of yield. But they have nice total return. I mean, or better total return than bond funds do. Before these high yield funds was out, everyone had to invest in bond funds or REITs. They're shitty. I hate bond funds and I hate REITs. There's a few good REITs, but anyway, this is a whole new world. Okay, so if any of you guys aren't interested in options, just tune out right now. I might even cut this into 2 shows later and repost just the options part of it. But anyway, people that don't care about options are excused. The people want to talk about options. Let's get in the middle of it. All right, so I had a Tesla pre-earnings trade that I recommended. All right, and I didn't know if the price was going to go up or down. The idea of the trade was, you could see all my trades are doing pretty well. The idea of the trade was, there it is, that volatility would go up into the earnings announcement. Well, the earnings announcement's Tuesday after the bell. Okay. The price of Tesla is where the dotted line is. Right now, this is a 4-legged position. You're selling a call calendar and you're selling a put calendar, but you do it together at the same time, or 4 legs. You could also consider it selling a straddle or a strangle, selling a strangle and then buying a different strangle behind it in the week behind it. So anyway, it's not that hard of a trade. So let's zoom forward in time and let's see the time decay take effect and see if as the profit line goes up. So this is Tuesday. This is tomorrow at 10 in the morning, tomorrow at 2. Then we're going to take this baby off right here. So if the market stays here, this trade will be worth $125 tomorrow, assuming volatility doesn't go up. There's what the trade looks like on a bigger perspective. So we'll take it off wherever it is before earnings, because after earnings, it's going to go the other way. The volatility is going to get crushed. We don't want to be in this after earnings. So we'll take it off wherever it is before earnings. And that's the way I do these trades, because they're long volatility. It's not really an earnings trade. It's a pre-earnings trade, actually. But I take that back. You could leave it on for an earnings trade too, and some people do that. In my case, I'm going to take it off and take the profit. I hope the price keeps moving up a little bit more today. If the price keeps moving up, it could be worth $300 or $400, and it's $700 worth of risk. All right, so that's my Tesla. That's a double diagonal. All right, so we'll just see what happens. We'll check that one out tomorrow also. So then Friday at the end of the day, I did a GME meme trade right here. So we'll check it out. It's down $52 right now. It's the same thing. It's a 4-legged double diagonal. The profit and loss graph looks like this. So, but as time goes by, where the dotted line is now, but as time goes by, you can see profit grows because the time comes out of the potential profit grows because time comes out of the options. We also need some help from the stock's price. GME is kind of dead in the water. What we're really playing for on this one, it's not a pre-earnings announcement. We're just holding this one until the next time Roaring Kitty tweets about it. and then we want volatility to jump 50%. And then that's actually what this trade is. It's not really a directional trade. It's more so of a long volatility trade. Anyway, so far that one still has 4 days left to go. So, or 4.5 days left to go. So let's just leave that one be. There's some other GME trades. I did another one for next week. They're all the same. GME's kind of in the dumps. All right, so now let's talk about these hedge trades. Okay, the main one is the $1 million baby New Year's Eve. I did this 2 different ways. There's 2 different ways you can hedge. So I wanted to hedge from now until the end of the year because I think the market's in a very precarious spot right here. We could keep going up into the end of the year, but I wouldn't be surprised if we pull back 20%. I wouldn't be at all surprised if we pull back 10%, 20% in here, in October especially. And that happens some years and it sets things up for a December rally. I'm not necessarily bearish per se, but I do think that it would be a good time to protect some profits. The other thing you have to factor in is because depending on how your portfolio is doing, a lot of portfolios are up. A portfolio invested in all growth would be up 25% just this year. A 60-40 portfolio might be up 15%. Okay, but a 60-40 portfolio, $3 million 60-40 portfolio that's up, well, even the 60% of the $3 million portfolio is $2 million. So $2 million of equities that's up 20%, that's 400,000. That's a lot of freaking money. I say protect it. So I came up with a way to protect $1 million. I shouldn't have used a $3 million example. This is $1 million. This is a person that has $1 million of equities, and he's trying to protect $1 million. He's trying to protect about $250,000 worth of profit. So it's going to cost some money. It's going to cost $32,000. I was saying there's 2 ways to do it. You can either do it. If I'm trying to protect the New Year's Eve, you can just buy a put for New Year's Eve, and that'll protect you. And that's what I did. There's another way to do it where you could buy a put for before New Year's Eve, maybe halfway to New Year's Eve. Then when that one expires, then you could do it in 2 or 3 parts also. There's advantages and disadvantages to each. This trade is just in one part. So this is going to cost the guy $32,000. He has 7 SPX puts at the 53 level, but he sold 5 SPX puts at the 5,000 level. These sold puts right here are helping finance these bought puts. Okay. So here's the profit and loss graph at expiration, but here's the profit and loss graph right now. You can see, there's a little bit of profit right now, about $5,900 right now. Now, if the market should drop suddenly, the market should drop 10% tomorrow, this position will be worth $100,000. Because remember, it's supposed to protect $1 million worth of equity. The market's down 10%. You need this. Your hedge needs to be up 10%. All right. And the way I designed this, you don't have to take this off either. If there's anyone interested in doing something like this, contact me, and we can look at your specifics in private, and not, but for $1 million portfolio that's up a couple 100,000, or right now at this point, this would be a nice place. So let's talk about the outcome. So you're spending $32,000. So wonder if I'm wrong and the market keeps going up. The market goes up another 10% between now and the end of the year. Okay, well, that sucks. 32,000 is 3.2%. So market's up 20% right now and goes up another 10%. So it's going to finish the year up 30%. But this, in this hypothetical example, this person spent 3.2 points on insurance. So you take the 3.2 minus 30, you're still up 27 for the year. So you aren't capping your upside. You aren't capping your upside because you aren't selling anything overhead to pay for these puts. You're selling something down below. I really like this strategy. Like I say, contact me in real life if anyone's interested in this type of stuff. So we'll follow these trades every day through the end of the year. I'm just going to mention how much they're up or whatever. We'll take a look at them. But I did it for some different account values. Here's a guy that has $250,000 of SPY, and he's trying to hedge that. So he used SPY. Puts, and he bought the 540 14 times. But to help finance that, he sold the 500 10 times. So he's still net long 4 puts, but he also is earning some time decay in there, or it's not really earning it. He's offsetting some of his time decay from the bot options. I'm making this be as least painful as possible. So let's talk about this guy. So if you have a $250,000 account, we're up 20%. So that means he's up 50,000, right? All right. Well, this spread costs $10,000. So he's only up 40,000. However, if the market drops, he gets a get out of jail free card. The market's down 10%. His hedge is up the exact amount that the market's down. He has a $250,000 account and the hedge is up about 28,000. So it's actually plus a little bit. So not a bad deal. I just got a video from one of my Max fans. I want to give a shout out to Derek. I don't know if Derek's watching. I'm not going to use his last name, but I have a fan. I have a couple of fans. Anyway, Derek's one of my favorite ones. But I have some other ones too. But anyway, all right. Well, great job. This is actually high yield related. All right. I'm going to answer Derek's question later. Derek, in case you're watching, I'll answer that question later. All right, guys. So this was a great, I think this is a legit strategy. So yeah, you're up 50,000 right now. So let's talk about some alternatives. I wonder if the market goes up another 10% from here. Same example as last time. It's the same. It's going to work out the same. You're still going to make some more, but you're going to make a little bit less by the percentage amount of the insurance. On a $250,000 account, if you spend $10,000 on insurance, it's 4%. So, take 4% off your return. Right now, the market's up 20%. Let's say the market's flat the rest of the year. Okay. Well, you didn't make 20%. You only made 16 because you spent 4 on this hedge because you listened to me. I was nervous about the market. But if the market drops, and let's say New Year's Eve, we're sitting at 450 on the SPY. I mean, that would be terrible, but let's just say we are. All right, this trade's worth $64,000. You could take it off, and that's at expiration. Well, no, it isn't. You could take it off New Year's Eve at 450, and then you'd have an extra $65,000. Now, of course, your account would also be down about the same amount, but that's fine. It's a get out of jail free card. I may start calling this trade the get out of jail free trade. So, all right, let's see what else we have to talk about. I was going to show you one other way to do this trade. Okay, the September 30th edition, $1 Million Baby, September 30th edition. Okay, this trade, remember this is for $1 million. The $1 million trade, the $1 million hedge, I should say, went to the end of the year, but cost $32,000. This one only goes to September 30th and costs $24,000. All right, so it's kind of expensive. But if the market drops between now and, but it has advantages. There's advantages to breaking it up. We'll go into it in another time, but basically it gives you less path dependency, because there is the chance on this other one, on the $1 Million Baby New Year's Eve edition. There's a chance that the market goes down between now and New Year's Eve, 25%, then rallies right back. You don't make anything. Okay. If you did it the other way, you guys probably know where I'm going with this, but the September 30th edition, by September 30th, it's down, or we'll go to September, whatever, market's down, whatever the market's down, you realize it. Now, of course, you're also going to have to pay the capital gain. So I think it depends on how bearish you are. The more bearish you are, break it up into shorter time frames. If you aren't that bearish and just don't want to worry about it, just do the New Year's Eve one. It's a little bit less efficient to go out all the way out to New Year's Eve. But anyway, like I say, if there's anyone that wants to do this in real life or that needs to hedge, or anyone else that's worried about their portfolio, hit me up in the comments. I love to run through hypotheticals. This is my favorite thing to do. All right, I need to get to this question from one of my Max fans. So I better get out of here and let you guys go. Let's see what else is going on. Let's make sure I didn't miss anything. I always put charts at the end. Before I let you guys go, let's just see what the hell the market's doing. We really didn't look at charts too much. So let's just see what's up the most. It's going to be, okay, but down the most is volatility. Crash, of course, which is inverse Tesla. Okay, so then up the most will be Tesla, NVIDIA, and NVDY, Coney, AMD, Coinbase. You could see all the crypto stocks are in play right now because Trump's back in the driver's seat and he's got JD Vance, and supposedly the theory is they'll be friendly to crypto. All right, guys. I'll let you guys get out of here. Let's check the indexes. I like the indexes. I don't know why people like single stocks so much. All I check is NASDAQ and S&P. That's all you need to know, right? I was going to say I forgot to draw the profit box, but I forgot. There's a 2-day profit box, and I did catch that when I drew it, so I'll fix that right now. But anyway, you can see we're well above the top line, of course, is max profit, and we're above max profit. So that looks really, really nice. So here's the profit box for SPX. It's well above its profit box. Here's the profit box for NASDAQ. It did a 2-day option. So that's why its profit box is wider. And finally, we'll check IWMY. Prices, actually, we'll check Russell to check IWMY. Price is actually going up as well. These guys also did a 2-day option. So we'll just extend this through here a little bit. All right, guys, I appreciate you being here, and you all have a wonderful day.